Hi there, everyone. It's Tim Knight, Slope of Hope. My voice probably sounds a tiny bit funny, but only a tiny bit. 2 days ago, I was utterly unintelligible. Been kind of sick lately, but feeling 95% normal now. By the way, and as you've probably seen, there's a couple of different ads historically I've run on the site. One is the Google ads, which you see right now. And the other is ads from a certain organization that promotes a certain wave type thing that I'm really not as enthusiastic about having on my site these days. So if you would mind clicking on any ads of interest to you, I would appreciate that, because that's really the only income from this little site that I get. And it's nice to get some clicks now and then. Thanks. Today was a funny day. Here is an heads up. The December future is what we're using now, ESZ0. As you can see, the volume kind of went haywire today because we all rolled over to that. And so this morning, a couple of economic reports came out. And when they did, the market really spiked sharply on those. And it was not in stomach time, because my big concern has been the prospect of this head shoulder, this inverted guy shooting up to like 1250. And you know, this is patterns within patterns right here, because in this grind that we've been in for the past year and the mega grind for the past 4 months, patterns never really seem to resolve. They just seem to kind of keep bouncing around in a range. And today was sort of no different, because as we look again closer there after that spike, then it just kind of eroded away and finally ended up the session up just 3.5, as opposed to being up like 10.5 or better earlier. And it's no surprise there was such a spike, because the news was so good on the economic front. There was substantially fewer jobless claims than expected, and the import-export numbers were much better than anticipated. So in spite of all this bullish news, the bulls really didn't follow through on the day with that stuff. So we wound up with, I wouldn't call it a shooting star, but it's definitely not a clearly spiky bullish pattern. It's still in the range, that 100-point range or so that we've all been living with. But let's look at a couple of other things. And for once, I've actually planned ahead. I've actually got some symbols jotted down I wanted to talk about. The Hindu, as I've mentioned, is in this sort of interesting diamond pattern. Obviously could resolve to the upside or the downside. And again, in spite of the big bullish news, just 28 points tacked on to this, but still very much trapped in that range. The diamond itself goes back about a year. But interestingly, and this is really fascinating if you're watching the IWM today, the Russell barely eked out any gain at all, 0.06% gain for the day. So let's just call it a wash, 0. Much weaker than like the spiders and so forth. So as we look, let's back up here a bit to a 5-year daily graph. As we look here, the last big hurrah in terms of just explosively bullish on this ended back in April. And there's really no doubt that from March 09 to April 010 was just dynamite in terms of the small caps. And since then, it's been trying to figure out what to do with itself. And we've had this just miserable, agonizing up, down, up, down, up, down, up, down going on, which is great for one party and one party only, brokers. They're loving these commissions, and that's the big winner in this. But the rest of us, not so much. Let's look at the S&P, and I want to talk just a moment about my the analog. And here's my kind of the thing that sort of haunts me. And I'm not going to bother bringing up the drawings and so forth. I'll just remind you that My 37 to 42 analog called for the market to fall between these blue areas, and based on the analog, it should have targeted this zone, and I say should have like it's completely toast, and it's not. If this year closes without that, yeah, it's toast. And if we rally above like 1130 hardly, yeah, it's toast then too, and we'll just chalk up the first couple of years of the analog as an interesting coincidence, and then that's it. We won't really look at that anymore. But what worries me is that this one little shtick down here in the first week of July, I mean, was that it? Was that the resolution of the fall? Because the comparing the dates 3742 to the present information, it actually lines up just gorgeously until we get to this area, and it still lines up, but it's really hard to tell which of these wiggles corresponds to the ones in the past. They were much clearer and longer in time back here, so it was a lot easier, and now it's so spasmodic it's hard to kind of label them properly. So in the bullish case, this was the fulfillment of the analog because it did penetrate between those two circles. In the bearish case, no, the fulfillment will not take place until we have a hearty fall down to the sub 950 zone. I'm still positioning myself for the latter of those. I was really worried first thing this morning that we were about to put the final nail in the coffin of that, but that was not to be because, as I've said a few times, it just didn't rally. The euro, very important to watch still. I had sort of, discussed earlier the break and retracement, and as long as we stay beneath that line at the very easy to remember number 1.2779, then we're fine. What would lay the groundwork for a move downward in equities would be kind of a melting of this. So if we saw this slide down, that would really be the prerequisite for a move downward. One other tidbit, I actually covered and re-entered a smaller position on this today, but I've been pretty pleased with how real estate has been doing recently in terms of relative weakness. Yesterday, in spite of the market strength, it was pretty weak, and today it was especially weak. You get this nice big bearish engulfing candle pattern here. And so real estate seems to be kind of questionable in terms of how much higher it can go. So that's a pretty good ETF. As you can see today, this had a honest to goodness drop today, which is always nice on a update to see kind of what managed to actually fall. And IYR in addition, long ago broke this trend line, but it also seems to be on the bear side of this trend line too. So if we did get some weakness in equities that sustained, I wouldn't be surprised to see this challenge that little trend line right there. Very last thing on precious metals. I was kind of surprised to see Mike Burry, who was made quite famous in The Big Short, say that gold was one of his very few bullish opinions. And he, in the same breath, mentioned he wanted to avoid crowded trades. That seems paradoxical because I can't think of anything more crowded than precious metal bulls. But this was surprisingly weak today. As I pointed out in a specific post, the opportunity to burst above this and sail was lost yesterday, and now it's cracked beneath this line, falling nearly a full % today. So pretty dang weak on the precious metals front. That goes for silver, and especially goes for GDX, which was down nearly 2% today. Fell hard pretty much all day long. As I've pointed out earlier, this was the prerequisite for the big plunge here in equities. This is worth watching for the same reason. I have managed to fill my time, so I'll bid you adieu, and I'll be back tomorrow, so this will be my last post of the day, probably. Good night.